Let's ask Professor Jeremy Siegel of the Wharton School. He's back with us. Professor, it is so good to see you. So we have a nice rally on our hands today. How does the market look to you now in what has been a very big and interesting and important week?
The market looked very strong, Scott, without question. I think the bar is very high for the Fed to do another increase. I think you would have to see the next employment report to be very strong, even stronger than this one. I think Tuesday's inflation report would have to be much above expectation. And by the way, the first day of their June meeting, they get the May inflation report, and that would have to be, I think it would have to be a triple strong, in my opinion, for them to raise again. I know we just reported that James Bullard, who has been a super hawk, thinks that one more 25 basis point increase is called for, but he actually hedged it and suggested that we are in the zone of the maximum tightening of the Fed, and I think that's where the market is taking its cue.
Remember, I mean, Bullard even threw out the 7 handle for the terminal rate. Remember that? It wasn't that long ago when he was talking about maybe going to 7%. So the needle has moved a little bit. Just let me ask you point blank. Do you think the Fed's done? Was it 10 and that's it?
Yeah, I think it is. As I say, if things really get much stronger, if the unemployment rate goes down to 3.231 and we begin to see commodities pick up and everything like that, which I absolutely think is a very low probability, I think the Fed is done. Now, that being said, at this point, the bar is also very high for a decrease in rates. I think that would only come with a negative payroll number, which, by the way, I don't think we can rule out at all in the middle or second half of this year. But certainly, that certainly doesn't look imminent. But that would start the conversation. Don't forget, Scott, we are entering into the political part of the 2024 race. Certainly the Democrats and Biden don't want to go in with a recession. And if they see those payrolls turn negative and unemployment rate go up, there will be a lot of pressure on Chairman Powell to say, hey, listen, maybe you should think about cutting those rates. I still think they will be cut by year end, and I think more than really what the Fed is saying and then what the market is saying.
Do you think the Fed made a mistake this week by raising rates again?
I wouldn't have, because I think there's a lot to play out with the cumulative effect of monetary policy. But is 25 basis points in and of itself going to tank the economy? No. The cumulative effect of the 500 basis points plus the lending restriction, which I think is equivalent to 2, 3, maybe even 4 25 basis point hikes, I think is more than enough. I don't like to see 11 consecutive monthly declines in the money supply. I voiced concern about that. I think we need to start expanding that part of the credit system again, because I think without it, I think the risk of recession go up. But nonetheless, no, it was a stronger report than I expected, even though we had downward revisions to February and March.
Yeah, I mean, Chairman Powell this week of the banking system, for example, declared it, quote, sound and resilient. Do you agree with that assessment by the chair?
Well, I think he was. I think the regional banks that are into commercial lending certainly are I'm not going to say in trouble, but I think their profits are definitely going to be impaired and maybe wiped out. I don't think there's a banking crisis. I think the loan spigot from the Fed is open, although that's at 5%. It's not like the 0 to 1% that they get on deposits. So if deposits leave these banks, the banks will have recourse to the Fed, but at a much higher rate. So, if they're lending long-term mortgages, well, as we saw at First Republic at 2.5, and they're borrowing from the Fed at 5. I mean, this is one of the problems of inverting the inverting the term structure of interest rates is that you're going to get some of those low profits in the bank. But I agree with him in terms of runs, in terms of impairment of the banking system. I'm not concerned.